Hi, I'm Andrew Gitt, and thanks for joining us today to learn how you can make more money by investing in index funds. For those of you who don't know what index funds are, I have a separate video that gives more explanation about what index funds are and how they work. And I recommend taking a few minutes to watch that video and get more background. Stick with me here today if you want to join me in exploring why to invest in index funds and how you can do it without having a lot of money. In fact, some of these you can get into for as little as $500. Let me tell you why I personally like index funds as an investment. There are a few main reasons. Number one, if you don't have a lot of money to invest, you can start small with even as little as $500. Number two, you aren't putting all your eggs into one basket. Index funds give you diversification. Basically, you are investing in stocks, but not all your money into one stock. Instead, you are investing in America into different sectors like oil, steel, technology, whatever. Different index funds put money into different places. But what if it means for you is this: if you put $500 in oil and it goes down, you lose. But if you put it into an index fund that puts it into a few sectors, then if oil goes up but steel goes down, you don't lose everything. Number three, for the long term, it's one of the safest places to invest. It has proven to outperform many other investments. Number four, you don't have to stay on top of it all the time. It's good for the passive investor. You can put your money in and then forget about it for a while the index fund manager monitors it for you. But remember that this kind of investment works best long term, so I suggest you be prepared to put money in it for at least 10 years. By the way, when you are doing this, no matter what your age or stage is in life, make sure that the fund is protected in case something happens to you, such as having a beneficiary on the fund. This is important for all of your investments. You should live a long and great life, but when opening investments, take a few minutes and make sure your money can easily transfer to someone else in case something happens to you. So how do you choose the right index fund for you? Some of this is personal. You have to decide what you want. Some indices are focused more on income, higher returns, more volatility, but still pretty stable. Other index funds are focused more on growth, long term, and the risks are lower. I'm going to give you a few ideas of the index funds that I recommend investing in when you are ready to start. There aren't any specific order, but just a handful that are a good place to put your money. Number one, the first place to look is Vanguard, which offers a few different index fund options. Vanguard was the inventor of the index fund and works hard to keep its reputation as a solid place. They generally offer low fees so that the investor can maximize benefits. They are known to be pretty trustworthy. They have good managers who take care of protecting your money. One Vanguard fund to look at is the Total Stock Market Index Fund, VTSAX. This is the most diversified fund, or I should say diversified index, which means it's very low risk. If you want the simple but safe investment, this is probably the way to go. Another Vanguard index is the Total Bond Market Index, VBMFX. This is the largest bond index, and it is the owner of many government and corporate bonds. Vanguard Growth Index Fund, VIGAX, is a little more riskier than other ones, but with risk can come greater rewards. It puts your money into stocks with great potential for growth, and it's considered pretty trustworthy and reliable. Before I do you a favor and tell you about other places to invest your money, can I ask you to do me a favor? Take 20 seconds and click on the like button under this video. And don't forget to click on subscribe too, so you can continue to learn more about how to make more money with less. Okay, back to where you put your money. Number 2, Fidelity is a pretty good place to look at. I'll tell you a true story about Fidelity. About a week ago, the daughters of an 88-year-old gentleman who lives not far from me realized that although he had a will, he had no concept of what his financial situation was. Apparently, he had put money into investments years ago and forgot about them. So he started calling each place, and when he called Fidelity, he learned that money he had put into years ago had grown to 6 digits. That means over $100,000, and we're at 14%. Now that is the interest, not the dividend. But he couldn't believe it. He regretted not putting more money there. This fund is not about dividends. That only gives him about $300 each year. This is about growth, reward to the investor over the long term. A good Fidelity fund to look at is at the Extended Market Index Fund, FSMAX. It's a big portfolio and is filled with American companies, more than 3,000. Most are focused on healthcare, technology, or industry. It's a little riskier, which means more growth, so it focuses less on the safer stocks like utilities. Number 3. On the other hand, if you are focused on the dividend, which means you want to get money every year, then look at Wisdom Tree U.S. Mid-Cap Dividend Fund, DON. This index invests in a few hundred moderate risk stocks that have good, not great, but good growth. It has a good reputation. And of course, and this is number 4, we can't ignore investments based on the S&P 500. One to look at is Schwab's S&P 500 Index Fund, SWPPX. While it's relatively small in terms of how much it carries in assets, it has a good reputation for being safe. Number 5. I'm sure all of this is very overwhelming. It's a lot of information, especially if you are new at this. So let me just give you one more place to look at. Direxion Daily S&P Biotech Bull 3X shares, LABU. This is a little bit of a different species. It borrows money to buy assets. In fact, it borrows 3 times what you put in, which is why it's called 3X shares. What does it do with your money? It buys securities. Pretty much everything on the S&P Biotechnology Select Industry Index. LABU is a 3 times leveraged fund, which means it uses borrowed money to purchase assets. If the funds is managed properly, it should earn more from the rise in value of its assets than the cost of servicing the debt. Basically, it takes your money, borrows 3 times as much, and then buys everything on the S&P Biotechnology Select Industry Index, a group of all the biotechnology stocks on the S&P 500. It hopes to get a 3 times return rate, meaning triple the daily returns of the S&P Biotechnology Select Industry Index. If you think that biotech has a good future, then this is a good place to put your money. And that's an important thing I want to mention here. There is not a cookie cutter way to go with investments. That means not everything is right for everyone. Some of this is about doing a little homework to find out what you're comfortable with. Some of this is about how much you can invest and how much to spread it out. Some of this is frankly a little bit of your gut instinct and your interest. What do you like? What do you think is safe for the future? And some of this is about trust. How much risk versus how much stability do you want with your money? Meaning, would you rather take higher risk and maybe gain more, but maybe lose more? Overall, index funds are pretty low risk, but you still have to be smart about it. I hope you get some good ideas today. These are the indexes that I give a thumb up to, so look at them. Please look at them. And speaking of thumbs up, did you have a chance to click on the like button under this video? And subscribe so you can get more great videos about investing. Finally, one last suggestion. If you have more money, one place to put it in a Vanguard Balanced Index Fund Admiral Shares, VBIAX. This is a little pricier and requires a $3,000 investment, but this fund gives you flexibility so you can put your money into an index that invests in both stocks and bonds. The stocks give you the growth, while the bonds will help you secure your money from inflation. This is a pretty low-risk investment option if you have more money to spend.